Hello traders, welcome to the video. In this video, I'll be showing you a very quick strategy that you can use to scalp 5 to 10 candles in the boom and crash market. This way I'm about to show you is one of the easiest way you can trade without getting spike in this boom and crash market. You can cash your 5 to 10 candles every day and then you make $5 to $10 every day depending on your lot size. As I always tell you, make sure that you apply risk management when trading boom and crash market and you have practiced well in your demo account. So without wasting our time, let me quickly explain how this strategy works so that you can go back on your chart and work on them. So if you look carefully on my chart, this is the boom 1000 and this is 1 minute time frame. So this strategy works only on the 1 minute time frame. You don't need any of the higher time frame to trade this strategy. So if you look carefully on my chart also, you will see that I have just 4 indicators. I have the envelopes, which looks like a Bollinger Bands on my screen, but it is envelope. I have the RSI, which helps me mark out the resistance and the support level. And also inside here, I have MACD and also the moving average, which we all know that it is a good combo when trading the boom and crash market. So let me quickly explain how the strategy works and give you an example before I show you the indicator settings. So first thing you want to know is the zoom level. So let's say this is the normal zoom. You want to zoom in 2 times. 1, 2. So this is the best zoom level for this strategy. So first thing you want to pay attention to is spikes. You want to see spike to the upside. And this spike should push this MACD and the moving average into the 85 level, which is a good resistant level. You want to also see this spike to break the upper envelope to the upside. The next thing you want to wait for is market retracing and you want to see one candle below the upper envelope. So immediately one candle closes below this upper envelope, you enter a sell and you count your 5 to 10 candles. What I do personally is 5 candles. Like I tell you, the longer you stay on chart, the more risks you expose yourself to. So when we scalp, we cash few candles and then we are out. You should pay attention to is you don't need to wait for the cross of this blue and the red. Immediately this blue enters, you have this spike to the upside and you want to see the spike above the envelope. You can see over here the spike is very long to the envelope. 3 candles were generated before you have the cross, so that is a long spike. This blue enters, you don't need to even wait for the red, because definitely if this blue enters, you know that cross will definitely happen when market is coming to the downside. So if you wait for this cross, you are likely to get late when entry and then you are likely to see 3 candles before you see spike to the upside. It is what I have experienced in live chart. It is also what I have back tested. The 5 candle might have even generated before you have the cross. Let me show you more examples. This is another one at this point. What do you see over here? You have a spike pushes the MACD into the 85 level. Another spike to the upside that breaks the envelope. You see that this is a very long break, so this is a very nice signal that you know that it's likely to play out. Then you wait for the candle to go below the envelope. Immediately you have that, you enter a sell and count your 5 candles. See, the market gives you. But if you are still waiting for 10 candles, you can see at this point spike before market continues to give you the 10 candles. So that is why I said 5 candles is very good. So the reason why you don't use envelopes alone is because envelopes can give you fake outs. And you see a 2 retracement, then another spike to the upside. So that is why we are using the MACD and the moving average in relation and in addition to the envelope, so that you can get the right resistance and support level where you expect market to sell to the downside. Don't try and think that you can remove the MACD and the moving average and then you can only use the envelopes to cash trades. You will lose your account doing that. So just pay attention to what I say, use the indicators I tell you, and then you cash nice trades and make money out of the market. So this is the crash 1000 market. Like I always tell you, the crash and boom 1000 is one of the easiest markets that you can trade in the boom and crash market, and the most volatility market, which is the 300. Not all strategy works over there, although I have dropped some strategies that works on the volatility 300 market and it works very perfect. So if you go back on my videos, you will definitely see them. What are you looking for the crash market? As we all know that the bull market spikes to the upside, so we want to pay attention to the spike to the downside in the crash market. And the next thing we pay attention to is the 15 level. So we want to see a spike to the downside, another spike to the downside that pushes the MACD and the moving average into the 15 level. But like I tell you, you don't even need the moving average to enter. The MACD alone is enough. So once you have that, then you want to see a candle generate back into the lower envelope. Here we pay attention to the lower envelope, because when market spikes to the downside, it breaks the lower envelope. One candle generated, enter your buy and count your 5 to 10 candles. See how market delivers it at this point. So this is another one. You have a spike to the downside, breaks the envelope but did not go below the 15 level. Then you have another spike that touches the envelope, but you can see that moving average and the MACD enters into the 15 level. Here I will not take the trade, because according to what I told you, I want to see the break to the downside, because this can just be a retest, retrace a bit and then break. So these are the conditions where you avoid trading this strategy. So this is a nice example over here. Spike, market retrace, spike, retrace and then spike, pushes the MACD into the 15 level, cross of the envelope. You can see that the crossing is visible. Generates one candle, two candle, then one candle above the lower bands of the envelope. Enter your buy, count your 5 to 10 candles, and market delivers it for you. So this is why you use MACD and the MA with the envelope. So you can see this is a very perfect example. Market spikes to the downside, retrace 2. If you had used only envelope, you would have entered here, then generate 3 candles, then you have a spike that can blow your account. But you can see at this point, this spike fake out. The MACD and moving average did not enter into the 15 level, but you have another spike, enters into the 15 level. Wait for when it is generating back, enter your buy and count your 5 candles to 10 candles. Market delivers, then you hold until when you see another condition. So this strategy did not only work on the 1000 market, you can also use it in the 900 market. So you can see at this point, this is level 2. We have a spike to the upside, enters back, enter your sell and count your 5 to 10 candles. It is the same procedure over and over again. You can see that you have 4 markets, so you don't need to rush. All you need to do is to just be there in this chart, see all these markets, and then you go around the 4 markets and then you cash trades. If boom and crash 1000 did not give you setup, definitely the 900 will give you 1 or 2 setups in a day. But the good thing about this strategy is you will get more than 10 setups from the boom and crash 1000 and the 900 in a day. You are cashing up to 50 candles profitably if you are patient and then you follow the rules. So this is also 900. This will be the last pair before I show you the indicator settings. Nice example: spike, retrace, spike to the downside, breaks the lower band, market retrace to the upside, generates up candle, enter your buy and count 5 to 10 candles. You can see after it has entered into the 15 level. When spike happens, you want to see market generate at least one candle that is completely below the envelope. That is how you know that the spike is a confirmed spike and it's not a fake out. So if you have a spike and the first candle that is generating touches the envelope, you must not take that trade. So you want to see at least one candle generated below the envelope, one candle inside the envelope, one candle above the envelope. Enter your buy and count your 5 to 10 candles. So I know some people are in rush, they will not want to watch this video to the end. These simple things that I am telling you are the things that you will use to get profitable when trading this strategy. So if you watch this video to like 2 minutes and then you miss this vital information that I just told you, you watch the beginning of the video, you don't finish it to the end, and then you see situations like that, spikes back, and you say the strategy does not work. So now let me quickly show you settings to my indicator. First thing you do is to click on this indicator icon over here. I said I have 4 indicators: envelopes, relative strength index, MACD, and the moving average. To select the envelopes, click on the F icon on the main chart. Envelopes, click on that. Make your period to be 14, shifts to be 0, deviation to be 0.1. Method simple, apply to close. For the styles, make it 3 pixels and select color of your choice. After that, click on save. The next indicator is relative strength index. To select that, click on the F icon on the main chart. Scroll down a bit. Relative strength index, click on that. Make your period to be 1, apply to close. Style 1 pixel. Select color of your background. If your background is black, select black. If it is white like mine, select white. For the levels, click on this pen icon, add level, type 85 and 15, style 2 pixel and select color of your choice. After that, click on save. For the MACD, click on the F icon on indicators Windows 1, scroll down a bit, MACD, click on that. Make your fast EMA to be 12, slow EMA to be 26, MACD SMA to be 6, apply to close. For the style, make it 1 pixel and select color of your background. For the signal style, make it 4 pixel and select color of your choice. After that, click on save. For the last indicator, which is moving average, click on the F icon on indicators Windows 1, moving average, click on that. Make your period to be 1, shift to be 0, method to be exponential, apply to previous indicators data. For the star, make it 3 pixel and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. After this, I want you to go back on your chart, backtest this strategy and trade it on your demo account. Practice for at least 2 to 3 weeks before you can say if you are profitable with the strategy. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.